Hi everyone, Richard Robbins here. Well, I got the update for March for the Toronto Real Estate Board, and let me be honest with you, the sky is falling. Yes, it's terrible. Just kidding. Let's put all of this into perspective. Interesting. I've been reading the media, and of course the media, if you read the media, you'd swear the sky was falling, but I think what we have to do is we have to put it in perspective. Now, I get a lot of comments from people. They're going, oh, you're trying to spin it and you're trying to make it sound good and all that sort of stuff. No, here's the deal. The deal is we had in the first 3 or 3.5 months last year, we had a market that was out of control with 0.7 months of inventory. So now we move into 2018, and of course, yes, we had the foreign buyer tax went in April of last year. We have interest rates went up a couple times last year. We now have stress testing, okay, on conventional mortgages that took place in January. So is that going to affect the market? Of course it's going to affect the market. But I want to try to put it in perspective for you so you can see that we're still in a decent market. So stick with me, okay? But first of all, let's have a look at the numbers. Let's look at what we did in March of 18 to March of 17, and there's no question there was a substantial drop. So let's look at the numbers. If we look at March of 18, we had 7,228 sales. March of 2017, we had almost 12,000 sales. Now, that's down by 40%. So bottom line is this, no matter how we cut it, we lost 40% of the sales. So here's what I want you to imagine. I want you to imagine that we've got a pie, and the pie that we have last March did 12,000 sales. Well, what's happened is our pie has gotten dramatically smaller, which means you have to take a larger piece of the pie. You've got to get better at what it is you're doing. Let's look at what went on with listings. We had 15,971 listings at the end of March of this year, where last year we only had 7,865, which means last year we had 0.7 months of inventory. Now, let's be honest about that. 0.7 months of inventory is a market that is fully out of control, okay? It's like a runaway train. Prices are going up by 20, 25% a year. You know, you're looking at a listing that you list a house and you're going to have many multiples of offers that are going to come in. Well, that market isn't healthy long term, and that's exactly why the stress test was put in place, because the government in their own way, whether you agree with government intervention or not, is trying to slow down the marketplace. Because what we don't want to happen is we don't want things to get so out of control that, number one, people can't afford to buy a house, or all of a sudden interest rates go up. And based on what the interest rate for somebody was, and when they refinance or when their term comes due and the rate's a little bit higher, they can no longer afford that house. And that's exactly what happened in the United States in 2008. So I look at it, and I can't say I agree with everything the government is doing, but I think what we have to realize is we're now in a healthier and a much more balanced market, okay? So let me show you what I mean. If we look at what's happened so far this year, you can see in January we had 4,000 sales, went up to almost 5,200 in February, and of course 7,200 in March. So what we're seeing is we're seeing progressive growth, what normally happens this time of year anyway. But the big number that I want you to concentrate on is this. Look at the months of inventory, the MOI. January you had 2.9, okay? Then you had 2.6, it went down, and now you have 2.2. So what's happening is your months of inventory is going down, which obviously means the market is strengthening just a little bit. Now look at your average sale price. You can see your average sale price has also gone up this year, but yes, it's down substantially from last year. So let's have a look at our micro markets in terms of months of inventory. You can see detached, okay, we've got about 3.1 months of inventory, semi-detached 1.3, condo townhouses 1.7, and condo apartments 1.4. So generally, if we look at the marketplace right now in Toronto, yes, it is substantially down from last year. There's no question. We lost 40% of the sales in the month of March over March of last year. So what does that mean for you? That means that if we have a smaller pie, what you have to do is you've got to capture a larger piece of that pie if you want to maintain the number of sales that you were doing last year. But the other thing I want everybody to remember is when you're talking about, say, 2.2 months of inventory, which is what we have generally in the Toronto Real Estate Board right now, that is still a very healthy market. Prices, the average price has gone down since last year, but where has it gone down? It hasn't gone down in condos. It hasn't gone down in semi-detached. It hasn't gone down in condo townhouses. It has gone down in the more expensive detached properties, because the first thing to go on a market is going to be the more expensive homes. So you look at that and you say, well, what are some of the advantages? Is it a better time to move up? Is it a good time to maybe consider moving from a condo apartment to a detached? Probably, because what happened? The delta got smaller, didn't it? You think about condos are still going up in price, detached are coming down in price. What a great time to consider moving up right now. And also look at interest rates. If we look at interest rates, even though they bumped up a little bit, they're still historically low. So here's what's going to happen in April. We're going to move into April. Remember, foreign buyer tax went in April of last year. And when that foreign buyer tax went in, it had a dramatic effect in the marketplace, as it always does, and more of a psychological impact than anything. So in other words, everybody's going, whoa, 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 we better wait. Who knows what's going to happen? Prices are going to go down. I better not be buying right now. And then all of a sudden, right, the numbers start to drop, which they have. When we get into April of 2018, here's what you're going to see. You're going to see a better comparison, because now we have the opportunity to compare to a month. Now, it was April 20th of last year when the foreign buyer tax went in, so the market didn't slow down to sort of the second half of the month. But now we're not going to see like a 40% decrease in sales, because now we're going to start to compare to the months that were already affected by the foreign buyer tax, and that's going to give us a much better indication of which way things to be moving. But in closing, all I want you to remember is this. There's no question that you've got to get better at what it is you do. There's no question you probably need to do more lead generation than ever before. There's no question that you need to be educating buyers as to why it is a good time to buy, why they should maybe be moving up right now. So yes, it's going to take a little bit of more work on your part. If you're working detached properties where you have a little higher inventory, then guess what? You're going to have to be really sharp with your pricing. You might have to take sellers out and start showing them what their competitors are listed for, so they can start to see what their home is now worth. Because I hear people going, yeah, but my home was like worth $1.7 million, so I'm not going to sell it for anything less than that. I go, well, just a minute here. If I bought a stock, and that stock I paid $60, and then all of a sudden that stock goes down to $50, can I sell that stock for $60? No, because the market won't allow me to sell it for $60, because somebody else will sell it for $50, and any astute buyer will buy it for $50, not $60. Well, the same in real estate. You say, okay, if I've got 3 months of inventory, that means roughly 33% of the homes that are going up for sale are selling, which also means roughly 66, 67% are not selling in that given month. If that is the case, and you're going to list a home for sale, you need to be sharper with your pricing, don't you? Because you got to make sure if only 1 in 3 is going to sell in a particular month, how do you become the one that is going to sell? Which means it becomes a bit of a price war and a bit of a beauty contest, right? You got to be the best price, you got to be the best looking to have your house sell or your listing sell. So I just want to say, yes, sales are down, okay? But let's not panic. The market is still operating with 2.2 months of inventory, which is still an extremely strong market. And I really look forward to April, because I think when the numbers come out in April, we're all going to be pleasantly surprised. So at the end of the day, it's still a great market. It's still a great business. Yes, you probably got to work a little bit harder. Yes, you got to start to work on your skills. You've got to change maybe the way you were doing it before. You got to change some of your dialogues and things like that. But you can do it, because you want to be great at what it is you're doing. Remember, it's a beautiful life, everybody. Make it count.